I look forward to having you on, Jared, because we could be, I think of us like at a bar, sidling up to a bar, and because we can talk that way about things.
That's a very nice image.
Well, it is. And I kind of, some of your colleagues come on and I don't really get anywhere. But with you, I think you're in on it. I think you know what's going on so that I can be really.
Where are you going with this?
I'm going to tell you where I'm going with this. Here we go. It's been a brutal couple of weeks for the market, obviously. Awful inflation numbers, now the likelihood of a hard landing, maybe even a global recession, according to some. The student loan forgiveness, in the middle of all this, adding hundreds of billions, even $1 trillion to the demand side. Doesn't that make the Fed's job even more difficult? Your allies, Larry Summers, Jason Furman, both warn that that's a problem. The president, once again, bowing to the far left. Does that justify, increasing demand and making things worse right at this time, Jared? I know it's no way you can sell this to me with a straight face.
Wait a second. Let me try the following, because this is a fact that is not reflected in the rap you just gave me. And if you ask Jason and Larry about this, I think they'll agree. You should try and find out for yourself.
Okay.
The thing you left out was restart. That is, restarting student loan payments, which of course have been in forbearance since the pandemic began. That begins in January. And if you actually look at the numbers month by month, the amount of restart, even with debt forgiveness, basically offsets the amount of forgiveness. So in that sense, it's a bit of taking a log off the fire and putting an equal-sized log on it. So if you look at the inflation implications, we've modeled this, we've looked at the numbers carefully, and again, I haven't seen those who understand this part of the plan disagree with this point. We think that the impact on inflation will be neutral because restart offsets forgiveness.
The other thing that I always have a serious bone to pick with the administration is the bragging about reducing the deficit. So $3.1 trillion in 2020, $2.8 trillion in 2021. So now you're taking credit for lowering that to $1 trillion in 2022 because we don't have some of those pandemic related expenses. Tax receipts have come in on those horrible too low corporate taxes that you're always complaining about. So they're at like record levels. But you don't believe $7 trillion in 3 years has anything to do with inflation being at 40-year highs, Jared? Really?
Well, first of all, that's a fair question. Let me get to that. But first of all, let me point out something that you blew by there. I think sometime, and good for you for putting it on your list. The part about tax, about tax receipts.
I'm ordering another one.
Please do. I appreciate that being on your list because a lot of people leave that off and just think this is the natural roll-off of pandemic-induced fiscal policy. It's much more than that. And in fact, the percent increase in tax receipts into the Treasury is actually larger than the percent declines in spending. It's 26% versus about 20%. And the reason for that is the very strong economic backdrop. I mean, you just had a conversation with Professor Siegel about how strong the job market's been. Of course, that's been historic. Almost 10 million jobs, an unemployment rate that's close to a 50-year low, and that's been generating significant tax receipts. So the deficit reduction is real. I think the important part on inflation, and people get this wrong too, is that when you have this degree of negative fiscal impulse, meaning the government is actually seriously stepping on the fiscal brake relative to last year, that's disinflationary. So both monetary and fiscal policy are pushing back against inflation.